The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
And as we continue here at the NAFB convention in Kansas City, Missouri, let's talk about these grain markets. Joining us now, Tanner Emke with CoBank. Tanner, it's good to see you again, sir. How are you?
Wonderful, Jesse. Always great to be back.
Yeah, it's a fun event, a busy event, a lot of conversations had with farm broadcasters from across the country, and I'm sure, everyone's going to be asking you about this grain market. It's been quite volatile, quite interesting here as of late.
Yep.
But I do want to start. I'm curious. You just returned from the Global Grains Conference.
Yeah, in Geneva, yes.
Yes. What were some things you heard at that conference? So any big takeaways that we need to be thinking about as we near the end of the year?
So the Global Grain Conference, as obviously by the name Global, has grain traders from around the world. And obviously in Geneva, big presence there from grain traders in Europe, in Russia, in the Black Sea region, grain traders from Brazil and China. So a very international crowd. And there was always this consistent theme of what's going to happen with tariffs, with trade and biofuel policy. Mm-hmm. We got a lot of uncertainty here in the biofuel policy in the U.S. And I was there to talk about the expanding crush space for soybeans and all oil seeds in the U.S. and what we're seeing around the world. Mm-hmm. And so we think that there's opportunity for more domestic usage, but on the trade front around the world, there's a lot more uncertainty. And that uncertainty is bringing in new players. We listened to the Minister of Agriculture from Kazakhstan, not a country that we hear a lot about outside of the world of wheat.
No.
They're one of the major wheat exporters in the Black Sea region. And the Minister of Agriculture was very excited about the future. A lot of investment coming into Kazakhstan because of the trade war between the United States, and they're geopolitically situated in an advantageous position by being neighbors with China and being in between or being nearby Europe. And so they're increasing their oilseed acreage. They increased their soybean and sunflower seed and canola seed and I'm trying to remember all the oil seeds here, by about 40%.
Yes.
Okay. All of that is in relation to what happened in the trade war. So it's not only Brazil where we're seeing increased competition because of the trade war. The Brazilian farmers are absolutely increasing acreage because they have capacity to do so. They have more land in the Cerrado that they can convert into row crop production. Mm-hmm. And they have now all this business from China. At the same time, there's other competitors like Kazakhstan coming into play. So what we're seeing now, I think, longer term is not just increased competition from Brazil, but it's coming from Central Asia, those countries like Kazakhstan that are bordering China. And as a result, we're going to see a lot more pressure on the global oilseed trade longer term. The upside here is that there's more biofuel policy around the world. It's not just the United States mandating renewable diesel or biomass-based diesel, but it's also in Brazil with their B15, going from B14 to B15. And in 5 years, they expect it to be B20. So more oilseed usage there as well. Those oilseeds, in this case for Brazil, soybeans are being taken off the market. And then over in Indonesia, they have their biofuel programs as well. Over in Europe, same thing there. So it's kind of a push-pull here. In the world oilseed market that we see playing out, we see a phenomenal increase of total oilseed acreage, but at the same time, we're seeing a phenomenal increase in veg oil usage for biofuels. So it's hard to sit here and simply say, well, all this increased production capacity is bad for prices, when you see this phenomenal increase coming at you from biofuels. Mm-hmm. So it's going to be, I think, a lot more of the same, unfortunately, Jesse. We're going to see these periods of markets demanding more veg oils, which is a positive. But at the same time, farmers around the world increasing production capacity because they're increasing acreage because they have the acres. It's going to be in Central Asia and South America. So as we have done always with as farmers always do, it's one of those things where you get used to the volatility. There will be moments of profitable marketing in the future, but those profitable moments aren't going to stick around for very long because farmers around the world are going to be also doing the same thing and expanding acreage.
Well, and thinking about that, even here in the U.S., we just saw a record NOPA crush print, for instance, a few days ago.
Absolutely huge crush.
Yeah, huge. Yeah, absolutely. Blew away the expectations. So
yes.
That in itself, even just in the U.S. alone, I mean, there's case in point to what you're talking about. I mean, the demand is there for the oil seeds, for the crush, right now.
Soybean prices are actually higher year over year. And that's phenomenal when you look at all the other crops. And a lot of that is driven by the expansion of crush in the U.S. We're going to expect to see more crush capacity come online next year. But I need to caution, though, that it looks like we are maturing on the growth path for U.S. crush. We only have maybe one or two more increases in capacity next year at a couple locations. After that, it looks like we're going to plateau. So I'd say this next year, we're going to see, still stronger demand. But once you get into 2027, 2028, things really start to moderate in terms of our local demand.
Thinking about here in the U.S. as well, there's obviously been a lot of volatility with trade and tariffs and everything going on with policy. But now we're getting USDA data back, and we're getting that flood of data here after the shutdown. WASDE's export sales data. We're going to get caught up on the weekly export sales, CFTC reports. So what is all of this flow of data combined with the headlines? I mean, what's your perspective on how that's impacting just the grain markets right now in the U.S. as we near Thanksgiving and the end of the year?
Well, as you pointed out, we're going to have a lot of data, and a lot of data is better than no data.
Yeah.
And so we're going to have a lot to work through. And this is what the market needs. We need USDA. We need these employees doing what they do. We don't need any more government shutdowns. And we have to have this flow of data because otherwise we're operating in the dark. We don't really have the information to quantify what sales are. We can look at the cash market. We can look at those kind of signals in cash prices, but it's not the same as market data on sales, on shipments. We did have export sales, the data that was still being reported, but the sales data was missing. Crop progress data was missing. I mean, all of these data points are very crucial for market direction. And so I think we're going to get caught up here pretty quickly. We have a lot of sales being reported here recently to China. That's a positive. All of this is now in the light of day. Now that now the government is operating, so a positive there. The question going forward is that are things going to change with China going forward on sales? Are there other countries now that aren't going to be able to make purchases under darkness, if you will, with those reports shut, with those ports gone? There were countries that enjoyed that darkness, like we can go do business without people seeing what we're doing. So now we've got some clarity on that, and the market needs that, and I think that going forward, this is going to be a little bit more. We're going to have more predictable markets, hopefully, but there's still a lot of geopolitical uncertainty as it is with China and their commitment to buy 12 million tons. We'll see if that happens.
Yeah. Anything else as you think about these grain markets right now? What would you reiterate to producers? What do they need to most keep their eyes on, I think, between now and the end of the year here as you gear up for 2026?
We're always operating in a global market, for better or for worse. We can never lose sight of that. We have competitors all over the world. We are still a reliable partner, even though we have a lot of geopolitical uncertainty as it is with tariffs. We are a country that has a vast network of storage, of transportation, of hedging tools with futures and options, and that still makes us reliable. Okay. So we can't lose sight of these positive things that the United States has to offer in the global market. The United States is still looked to as a global leader when it comes to grain and oilseed markets. We still deemed mostly reliable despite the geopolitical uncertainty. So keep that in mind, but also keep in mind that as we've always known. High prices don't stick around for very long because of so much competition globally.
Yeah.
So when those profitable prices do emerge, and they will, it'll be for a very brief moment. And you have to be nimble, and you have to take advantage of that moment when it presents itself.
Very good point. With that, we'll wrap it up there. Tanner Emke with CoBank. Always good to talk with you, sir. Thanks for joining us here at Trade Talk.
Thanks, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.